We could be seeing some nasty signs from the S&P, from the Nasdaq. We need to talk about it. I am Dr. Stock, Doctor of Education, and baby kangaroos, kind of lazy. We should call them pouch potatoes. Alright, as I record this, the pre-market hours are whittling away. We're getting down to the market open, but still there's a lot of information that you need to see in this video because it's going to be very applicable to what we're likely to see in the markets. So let's kick things off with the charts. Here's the S&P, and what you can see from Friday is that we closed down below the 20-day on this, and if I move some of these lines out of the way for you so you can see what it is, that's this beige line coming up through here, down below it, but in the pre-market hours, we could potentially be opening back above this, which would be a very good sign in the near term looking at the S&P. So being down below that 20-day, why is that so significant? Because historically, most recently, it's been such a good area of support for us, giving us buying pressure there, giving us a solid bounce right there. And you can see the last time they crossed over it, we also had a significant run from that. We also rode along it back here. You can see all that time that we spent as support. So breaking down below it and confirming down below it is something that could sell us off some more down towards the 50 EMA and SMA. This light blue line right across here is the SMA, the simple moving average. Here's the exponential moving average. Both of them are 50-period moving averages as you're looking at them, and you'll notice that they coincide with about 542 for SPY. So if we should sell back down, look for heavy support there. Now, what else do we need to be looking for something like this? Well, if we sell down in the near term, that could be something that could set us up maybe for a shoulder there, maybe for a head here, and maybe for a shoulder there. But honestly, I think there's a bigger worry that we need to be paying attention to. I'm going to go out to the monthly chart on this, and I did with the most recent peak we have, I adjusted my top trend line for this one. So if we fail to retake the high on this one, notice on the monthly chart that high top wick that we're getting with this candle that's right here. And I also want you to notice the price action that we have going all the way back to 2018 with this rising wedge pattern, which is a bearish reversal pattern, so it could potentially sell back down if we happen to lose 542. We have a drop all the way down to like 480. That's gross. So if that happens, we need to be on the lookout for it, but that also, during that scary time, where's the bottom of this thing? Where's things going to end up? That's if it does happen to sell that way. Well, check out that bearish divergence that we have at the RSI between that and the rising wedge. If we fail to put in new highs, that could be a potentiality for us. That could be something coming up that we're looking for some of that nastiness, and that is not a nice fall from where we're at right now. So if that does happen, and I don't know that it happens because this can go on for a while. This can go on for years, as a matter of fact, into the future before we get that kind of sell down. Now, mind you, there's usually volatility along the way, usually some corrections and stuff that happen, but if I put this on here, that'd be a 15% drop, and if that happened in short order, that would be super painful, nothing that anybody really likes to see. Now, mind you, we could ride that down, especially with options that could really help us out. We could also protect ourselves with options if we have a lot of long positions as well, but that also tells us about the load zone, about the buy zone that I would find for myself. I can't speak for others. With the S&P, should we come down that way? Just take a look at this 50-month. I put this out here months ago. I'm going to keep on reminding people of it. So back here, the sell down that we had in 2018, the pandemic, which put us way down below it, and then we got ripped back up above that 50-period monthly that we have on here, as these are monthly candles. So this is 50 months at a time. And then we had the sell down in 2022. We came down and we had one candle tag it, the next candle rip up from it. So if we were to sell down that way, that's towards, which mind you, as we melt away some of these earlier candles that are much lower, that's going to bring these up higher. The moving averages are going to come up to meet this bottom trend line. That could tell us about that next significant area. That's, again, if we sell that low. So I'm not trying to sound like a bear, but I am trying to sound prepared for in the event that we should happen to sell off. Now let's move over to the Qs, because this one, as I put this up here for you, this is one that I'm a little bit more concerned about a head and shoulders pattern coming to pass, because what we have is this really solid potential neckline happening right along here, right around 475, and we have a potential left shoulder. We have a potential head on this thing, and we could have a potential right shoulder coming off of that. So what should we be looking for to see if that's something that happens? Well, that would be a bounce, and that I've talked about that in my previous videos last week about a bounce off the 50-day EMA support, which is where we found that support before. Pre-market hours are suggesting that we're going to have that little bit of recovery. So what would that shoulder look like? So we get that bounce, and then what we're looking for is something that might happen to be somewhat near that 487 level, which is where we peaked out for this left shoulder over here for this right shoulder. So we wouldn't be watching this peak back here, like I said, at about 487 for getting that rejection and sending us back down towards that 475 level. If it does, and we confirm down below 475, we break that neckline, there could be a significantly further sell on QQQ, and we want to be watchful for where that could take us. So if we go out to the monthly chart on the Qs, that's weekly chart, one more time. The monthly chart is just going to look wild on this, by the way. We're not even close to where it would be at. But now, mind you, we can rely on this previous peak that's back here, right at about 407-ish. Now, mind you, we'd probably, if we came crashing down that hard, that could probably put us more likely to that round number support of 400. And like I said, that would be absolutely nasty. Nobody wants to see it, but it is something that we want to be prepared for because we don't want to be caught. We don't want to be caught out there naked in the ocean when the tide goes out. So for that one, if we were to put a measuring stick on that one from about where we're at right now down to that, that'd be about 16%, which would kind of coincide with that 15% that we saw for SPY. And again, don't know that it's going to happen. We have, mind you, the 50 months. When we look at this, you can, again, go back to 2018. You can go back to the pandemic. You can go back to 2022, towards the end of that, into the beginning of 2023. That is well down below what we have that peak at right there. But if we did get down that low, that would be like a super heavy, significant buy signal, in my opinion, for where we could find that bounce. But it wouldn't come from without having that significant pain. So again, not trying to sound like a bear. I am trying to sound prepared if things should happen to go that way. But just like what we had for SPY, that's something that could be months off, it could be years off, so it's not a prediction that I'm putting out there. I want to be clear about that this is not predictive in the least that I'm talking about right now. The technicals suggest that such a thing could happen. These are eventualities that we want to watch for, so that way we don't get surprised. If instead we break those technicals to the upside, well, then that gives us further upside and we can continue to go long in our positions, although I think at this point in time there's still a lot of good reason to be cautious about that. Moving over to Bitcoin. So let me pop up the Bitcoin chart for you. And so what we're looking at for Bitcoin, we have $70,000 psychological resist, and then we also have a critical resistance from this trend line form from these previous two peaks that we had back over here. So should we break 70,000 and that critical resistance, we have a green light up to about 75,000. We do want to watch this resistance line drawn on here from the most recent supports that we've been finding as we've been climbing this. And it does, if we draw a line across the top of this, it does make a little bit of a rising wedge formation. So falling through the bottom of that could have us climbing back up again. And now if we get a sell the news event from the Ethereum ETF approvals hitting us, that's something that for Ethereum then, which we actually have a little bit of a breakout moment happening now. We have lost the 3,500 mark. We want to regain that 3,500. If we see that support at 3,500, then we have further upside, taking us to about 3,700, and we really want to make that run back on that $4,000 mark. Now, mind you, if we sell the news on Ethereum, if those ETFs get approved and it hits and it drops instead, that could lead to significant buying pressure, significant buying opportunities, especially as further adoption comes ETH's way, especially with the burn mechanism that they have, and the fact that it could be a somewhat thinly traded market for that, when that the pricings that we get should be significantly volatile. But that means that from swinging down, swinging back up should swing a lot harder. So we want to be watchful for that for Ethereum. Now, the next two big ones that I have here, Tesla, their earnings coming out on a Tuesday in the after hours. We have an area of support for this going from about 240-ish all the way down to about 232. Area of resistance is about 247 all the way up until we get to 257. And right now in the pre-market hours as I record this, we're trading between those two things. So between now and earnings, watch for that price to wiggle around in here. I wouldn't be surprised if it settled on about 250 to put us right in the middle of 231 to 271. So we might actually have those price targets hitting us. Let me go down to the hourly chart because I think I have those labeled on there for you. I may have removed them. I think I did, but that's okay. 231 to 271. If we settle around 250, we'll see. $300 stock price prediction. If earnings are received positively, I think that sets us on a trajectory to hit that $300 on that climb upward following earnings. If instead we get sent downward, then we're heading back towards that 200-day, and it's probably going to send us back to about $200 for that stock price. Now, mind you, those are trajectories. Those are paths to be on. That's not a price target following earnings. That's just something to be aware of. So I did say for this $300 stock price prediction, that part of that was pending on strong earnings. And like I said, I think it does set us on a good path if earnings are positively received. So we're going to have to watch for that in the stock price reaction on Tuesday evening, and then also on Wednesday during the trading day. That'll tell us about what the market thinks of those earnings. And I also want to throw in the caveat when it comes to Tesla as well, with this $300 stock price prediction, that if the bottom falls out of the market, such as some of the technicals suggest that some of the weakness could be coming sometime soon for us, most likely between now and the election if we're going to see it. And if we don't see it, we could have still a little bit of ups and downs, volatility in there. But by the end of the year, I think that we end higher. And so we'll have to watch and see what happens, what sort of sell down, if any, we get. If the market does stay about where it's at right now and the earnings are positively received at $300 trajectory by the end of the year, I think is very, very reasonable. Now for NVIDIA, what do we got to watch for NVIDIA? Well, right now in the pre-market around 120, we have a gap to fill on this. Then we have significant resistance around 125, a gap to fill from 122 to 125. So we want to be watchful for that. We have this trend line resistance from the last two peaks, not confirmed yet until we get a third touch on that. So if we fill this gap and break to the upside of 125, I think that gives us clearance to head up into the low 130s, and then we're trying to fight with this confirmed resistance. That's if we come up to it and confirm it, and watch for a rejection off that trend line. We had the 50 MA support on this, buying pressure, evidence of it over time. We had it back over here. We had it here in the end of June. We had again most recently, and right now that support is holding out. We'll see if we get that gap filled because we don't have a lot of economic news this week, although next week is a much bigger week for economic news. That could allow some levity to come back to the markets, especially if earnings continue to hold out strong. So corporate earnings, I think, are the catalyst that we have this week. NVIDIA earnings themselves, though, aren't until the end of August. Mind you, if we do get a sell down on NVIDIA, if that does happen, we have a gap to fill between 96 and 102. So we want to be watchful for that. Looks like I'm missing a space in there. Let's toss that in there for you. Boop. Uh-oh. Got rid of the whole word. There we go. So be on the lookout for that. That if we do sell down, we also have I guess this gap over here was filled by this candle, but we do want to watch down to 110 if we fall down through this support level that we have at about 118 and we fail to hold these moving averages as support, down to 110 first, and then if things really go sideways for us, we have that gap to fill all the way down to 102 down to 96. So we want to be watchful for that to happen for NVIDIA's prices. So guys, if you want to see my buys and sells, how I'm playing the market, all that kind of stuff, you can talk to me and my community members at the Discord available through the Patreon. That link is down in the description. Click sign up and join us. We'd love to have you over there. And if you want to learn to do technical analysis like I do and really bring the power of technical analysis trading to your portfolio, there's a link for that course down in the description as well. You can even check out my chapter on options that's in there. Thank you guys very much for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.